Hello and welcome traders. My name is Rachel Deshelle, Senior Manager of Trading Services and your host for Long Options. This is a class where we focus on option buying strategies and we make the assumption that you're already familiar with those basic option concepts already. If not, you are more than welcome to stay, but you may want to review our Getting Started with Options series first. That actually comes before this class. So stay tuned because today we're going to go through some resistance breakouts, some pattern breakouts, and maybe some patterns on the horizon too that will give us trade setups for the future. But before we really get started, I want to give a heads up to Brent there in the chat. Please chat in your questions, comments, requests today. And please follow us on X as well. Brent is Brent Moore CS. I am Rachel CS. We post all different types of charts if you want to keep up to date with some of those price patterns. I know I post a ton out there. And then as far as this video today, please give it a thumbs up. I know it helps other traders find videos, find what they're looking for when they are learning about options. And please subscribe to our Trader Talk Schwab coaching channel on YouTube as well. So before we dive in, let's cover a few important disclosures here. So options carry a high level of risk, are not suitable for all investors. The information we're going to cover today is for general information and educational purposes only, should not be considered recommendations or advice. And we're going to go through the Paper Money software application. There's a few differences between paper and live, so keep that in mind as we go today. Now let's get into our agenda a little bit here. So our agenda is the same as every time. So we're going to start with a market overview. We're going to review some of our old trades. We're going to go through and find new trades, those trade setups, discussing the concept of long options and the concepts of price, time, and volatility and those factors and how they affect our strategy and place those new trades. So let's dive in here quickly to Think or Swim, and let's take a look at what the major market indices are doing today. As we really near the corner of the end of this year, and we know that possible Santa Claus rally period really starts tomorrow and is really the last 5 trading days of the year, and also the first 2 trading days of the start of the year. So definitely a lot of traders are going to be keeping their eyes on the markets and what seems to be kind of taking place here. But let's just start with the NASDAQ composite today, because we do see this pattern actually forming in the NASDAQ where we have a couple touches of resistance here right around that 23,700 level. So that's what's really acting as near-term resistance here. And then we have 2 touches of support down here on this trend line support. So 2 touches of resistance, 2 touches of support is what's really forms a triangle. And we see most recently price really gapped up really at the end of last week and is holding above that 20-day moving average. So that's going to be our near-term support in this short term. And then we have that 23,700 zone up here as resistance here, leading into that possible Santa Claus rally period. So let's take a look at the S&P 500, because we actually have a pretty similar setup here, except the S&P 500 is kind of leading the charge here with really retracing to those new all-time highs here. We can see those moving averages are slanted up. We do have those other touches of support down here. So it's really setting up nicely with this ascending triangle pattern taking place. And if we just switch this real quickly to a line chart, because we know closing prices are most important. That's what we're taught in Technical Analysis 101. We can actually see we made that recent closing high mid-December on the 11th, and we are so close to making that new high on a closing basis here as well. So definitely that March higher is going to be what traders will be looking for in the near term. And then we have this support gap right around where that 20 period moving average is really resting there, right around 68.45 to 68.50 or so. So keep an eye on that range as well. I do see a couple things in the chat as far as Let's see. I know Art mentioned you missed the class this morning. The class is too late. Good thing we always have these getting started with options and long options classes recorded. So definitely check out those playlist recordings there. And yes, Dion, nice to meet you there as well during the Miami trading. I met a lot of you traders down there this past weekend. We had a ton of fun. We learned more about advanced option strategies there. So that was super fun as well. So we went through those two moving, or I guess those two major indexes there. Let's also cover the VIX because I think there's something pretty notable about the VIX today is that it is actually crossing below, it broke through support here right around that, really that 14-point level there and made new yearly lows today. So volatility really at an all-time yearly low as the S&P is pressing up really, really close to those all-time highs leading into this possible Santa Claus rally period. So I think it's safe to say that volatility is definitely getting compressed, and we'll just kind of have to see where it takes us to the upside here for the major indexes here at the end of the year. Now let's cover some of our old trades here, just looking at the trades that we've placed over the past couple weeks. I'm going to expand all of these under my long options section here. If you remember with TJX, we took that trade, I want to say maybe a month and a half ago now. Let's see when we opened that trade. Yeah, so the 11th. So a little over a month ago, we noticed that TJ Maxx essentially was in a long-term uptrend. So we took a long call. We took a leap option in that. We are still up on that option there. We're going to keep things as they are. Sibanye-Stillwater, we actually took leaps in that for another leap example trade last week, and I'll just remind you of what the chart looks like in Sibanye-Stillwater. We saw this cup and handle, also ascending triangle type of formation stacking up. We obviously saw a run of a trend this year, really, I mean, a 5x type trade, and we took that long call with that break of resistance there. And so we've moved our stop up a little bit as we go. I moved it up to nearly the close of that candle a couple days ago because it looks like that gap will likely probably be a level of short-term support there. But again, we're looking to hold this for the long term. So just to remind you of our trade here, we are up quite a bit on the day. We're up also quite a bit on this trade. So far, it's up nearly 7% today, so that's kind of carrying us higher. And we moved up the stop to the stop price at 490. The stop limit or the limit side of the trade, that order that's going to be sent after the stop at 460 or better. So that's our limit price there for those of you that are following along. GEHC, let's go back to that chart because we're still up on the trade overall, but we're kind of getting crushed today on that one. So let's take a look at GEHC. We took a long call position when we saw this breakout of this massive range here. We also saw this pretty big pennant pattern that really took place from the bottom of the range with a support retest there. And now we've had a little bit of rangy, choppy price action here today with almost like an inside bar type day. We have the body of the candle really looking like it's within that body of the previous day, and then we have the high and the low within the previous days of trading as well. So that could be a possible pause, a possible reversal signal here in the near term. We may want to look at that 20-day moving average as a level of support, but we still do have our orders in place here. We do still have our stop at 850, not too far below where the price right now of that option, the mark price is at 970 there. And then the last one that we do still need to review, we're down a little bit on this one, is CNC. We do still have quite a bit of time on this one. We can see it's making yet another support retest. We saw that cup and handle breakout, a support retest, another breakout to highs there, now another retest. But what I will say with this pattern is that if I take some of these drawings off of here, I'm going to show you what we can kind of see here a little bit more. Trend line, take that off. Trend line. Okay, so throughout all of this, we are still making higher highs and higher lows. So if we kind of compare these lows to what we had been making, we saw that turnaround in the trend where this handle really took place and is kind of came back, formed maybe like a triangle pattern here with support around right around this level, around 37.22. We're still making those higher highs and higher lows here, and it looks like we're kind of riding this wave of that 20 period moving average here in the short term. We have our stop right underneath, so we are still there as well. And then I do see a question in the chat as far as DAL. So when we did trade Delta Airlines, we did trade a breakout of this range. We traded a long-term option in this case. We placed this quite a few weeks back, I believe. But we were looking for that breakout of the range to reach those new period or that new level of resistance, which were those previous yearly highs there. We ended up actually closing out this trade a couple weeks ago. We ended up taking profit right here after about half of the move because we were comfortable with that profit. So we took profit there and closed out at a decent gain. But man, if we would have wrote it up a little bit more, or even just closed out one of the contracts and let our profits ride, we could have taken really our full profit target there. So kudos to you guys who stayed in that trade if you did place that paper money trade along with us. But yeah, just we are really hanging out right above that area of old resistance, now new support for Delta Airlines. So great question there. Let me see if there is any other questions in the chat. Is one of the rules for buying straight calls a large volume that equates to momentum? Now that can be one of your rules there. I know large spikes in volume typically tend to come with like gap moves, or typically some large spikes in volume sometimes even may create a reversal type pattern. But I know a lot of traders will look for a decisive breakout of a support or resistance with an increase in volume, really showing that participation in the trend. So if I wanted to add the volume on here to give us a little bit more conviction to that possible breakout that we saw back then, let's take a look here what we saw. So we had the breakout of the range right here. We didn't necessarily have a huge increase in volume there. And let's take a look at momentum as well. We'll just use the RSI as an example. Let's see what the RSI was doing. So when price was reaching that level of that resistance break back on 1126, we did see momentum rising to the upside, which is typically what we like to see when price is forming new highs. We typically like to see momentum follow it as a long options trader. If we are seeing maybe a divergence in momentum or momentum not confirming, I guess it wouldn't give us as much conviction into taking the trade. But when we are buying options, whether we are buying call options for the upside to take advantage of a bullish move, or buying put options to hedge, or taking advantage of a bearish move, we are essentially trading the trend, because these are the most directional trades you can actually place. So we are just trading the trend in this case. Momentum is that second derivative, so that may be one of your rules that you put in place. Same with volume, but it's going to depend on whether that's part of your process or not. I know it's sometimes something that we kind of talk about in this class, but the number one thing we focus on when taking these trades is price and looking at those support and resistance levels and really keeping an eye on that trend. So great question there, Vic. I'm going to take this back off the chart, hide the volume, and then I'm going to hide this RSI study. Now we have a few different trades to place today based on patterns that I'm seeing in the market. I mentioned in the beginning, we're seeing some possible patterns stack up too that may give us a watch list for the future to take a look at. But let's look at this one that I am noticing kind of a trend breakout here. This is going to be Philip Morris. There's a couple price patterns that I see here on the chart. So those of you in the chat, If you are looking at this chart on the 1 year, 1 day, please call out 1 or 2 patterns that you're seeing on this chart and what type of directional trade you would take as a trader that is looking to trade these possible patterns. So I'll give you a minute as I'm taking off some of these moving averages just to clean up the chart a little bit to show that trend, because we can obviously see a turnaround here with those kind of bottoming out, price really rising above that 20 and that 50 at the same time. So I'm going to take those off to give you guys a minute to just kind of respond and throw those ideas there in the chat. I see Vic notices a Head and Shoulders. Who else? Don't be shy. Throw it in there. Rams is also an inverse Head and Shoulders. Yep. So that is one of the patterns that I'm seeing here. It's a little bit of a slanted Head and Shoulders. So if we take a look at this here, we can see this neckline really taking place here at this resistance that was broken through a few days ago. And then we see this left shoulder crafted out right here, the head of the pattern, and then the right shoulder right here as well. And you can take a look even at the symmetry of this head or of these shoulders by connecting a parallel line to that neckline. That's what's going to give you that indication of that symmetry between the left and the right shoulder, which is honestly sometimes hard to see when you're having to turn your head a little bit to look at a chart of this. But that is the inverse Head and Shoulders that we are seeing there. And thank you so much, Yina, for putting this in a Yina and Eva are mentioning another pattern that I also saw in this as well, which is that bull flag. And sometimes you do see that with the completion of the right shoulder here. So I'm going to show us this bull flag that really took shape here over the last few days. So this would give us a couple reasons for a bullish setup in Philip Morris. So in this case, if we are bullish, we are looking to take advantage of that up move. We are likely going to buy a call option in this case to be directional to the upside. So let's look at a couple different levels that we could kind of target in the near term as far as what a possible move we'll see in a shorter or a longer period of time. And it may give us a couple different trade ideas to do in this one. So starting with the longer term, we have that inverse Head and Shoulders here that took place really since the beginning of October. So that's about 2.5 months or so, almost 3 months where this pattern has really been taking shape. So if I'm looking to buy a call based on this inverse Head and Shoulders pattern with this recent breakout, I may be looking for an option that has more than 3 months left till expiration to buy a call option on that. And if I am a pattern trader looking to see what type of move that this stock could make within this upcoming time frame, typically just because markets are symmetrical as far as time and price. So if I looked at that breakout, that would put us almost right at that area of old resistance now, or I guess old support now, new resistance, right around that $173, $174 level there where we saw those recent highs there in August. So if you are wanting to take that long trade in a paper money account, looking for that trade setup there, that is typically what a trader, long-term pattern trader would look at in that case. But let's just keep it easy and look at this short-term pattern here. Look at this flag pattern. We saw this taking shape really on the 12th. So just, I mean, really a week and a half ago that this took shape in. So if I want to project to the upside, really see where this could run in the coming days, since we do now have 2 closes above that level, we have a confirmed percentage move above that level, we could see a run possibly all the way up to 169 here, which is actually another level of these old swing highs that we're seeing there as well. So that gives us another $8 or so in the coming week that this stock could possibly run to the upside. So that gives us confirmation. 2 closes. We know the price of, we don't have a close yet today, but the close is definitely, or I guess the current trading price is definitely far beyond that pattern breakout. So that gives us a percentage filter as well above 2% of that breakout. So that could give us an indication there that, hey, it's okay to take this trade. Let's take a look at the implied volatility, look at the liquidity in the options, and let's go crafting our strategy around that, because we know that this is going to be a short-term swing trade. This took place in just a week and a half, really to form out that pattern. So likely within the next week and a half, we will, if this pattern does play out, although patterns are not guarantees, we may see that push to that resistance right around 169 or so. So let's take a look at the trade tab. Look at a couple examples here. IV percentile, so implied volatility, is still really close to that lower fourth of where it's been in the past year. So implied volatility is still relatively low, which is great for an options buyer, because you, as an options buyer, can look for these options at a little bit of a discount if their volatility is lower. We know the prices of the premiums in our options are going to rise as volatility rises. So the fact that this implied volatility is pretty low, still near that lower fourth, definitely in the lower third of where it's been over the past year, that's where we're going to look at as well. Now, when it comes to expiration, since we're expecting about a week and a half, possibly maybe 2 weeks for our target price to be reached, that's going to be a lot of time passage to do the monthly options for next month, just because our time value, our theta decay, will really kick into high gear typically around that 30-day mark from expiration. So we're going to look a little bit further out at the 20th of February, almost 60 days out. We see 59 days out from expiration there, and that's going to give us a little bit more time. And you can see the theta decay, or that kind of value that an options trader would theoretically lose with each passing day on the value of that option. You can see what that theta decay is there. So those at the money options have about 5-6 cents of theta decay, so not too much compared to the nearer term. So if we are going to take a long directional bullish trade in this, let's look for an option like we do most of the time during this class, an option with a little bit of intrinsic value, a little bit of a greater delta, which is going to give us a couple of things. It's going to give us more of a move on our option should that option price move, or should the stock price move in our direction to the upside. It's also an indication of this is kind of its theoretical probability of that option expiring in the money as well. So that's going to tell us a couple different things there. So I may look at the 155 strike call, and I'm going to collapse this sidebar to show you the spread on that. The 155 strike call, that's less than a 10% spread there. That's something that we want to be aware of as far as just kind of finding tight spreads on the bid and the ask. That's one thing that a lot of traders will look for, to look for that level of liquidity. Obviously, we don't see a ton of volume today, which is probably why that spread is a teeny bit wider, but we do have that level of open interest there. If you wanted a little bit of a tighter spread, we could go out to that 160 as well. It's going to be a little bit less of a move. We can see the delta is 57, so theoretically, if the price of the stock goes up $1, our option will theoretically, with all other factors remaining the same, our option will theoretically go up 57 cents versus 69 cents. But that open interest number is higher. There's a lot of activity at that level. So we may actually go with the 160 today, since that does have a little bit of intrinsic value and a tighter spread there. So what I'm going to do here is right click on this option, buy custom with OCO bracket. We use this a lot in this class, and I have seen feedback, especially last week with you guys, for filling out that survey, which we really do appreciate that. Like I mentioned, we look at those survey results and see what we need to do better or what we need to take more time on in the coming webcasts. And this was a couple of the comments actually with building those first triggers OCO orders. So I'm going to break it down if you are new to this order type. This is essentially going to give us an entry price. So when we enter into this option, since we already talked about that we have confirmation, we want to enter this today. This order, when it gets filled, is automatically going to trigger our upside and our downside. So it's going to trigger an OCO, or a one cancels another. So whatever happens first, whether it's the stock runs to the upside and we take our profits, or the stock goes down, breaks down, and hits our stop on the downside as far as our risk that we are taking within that trade. Whichever one happens first, it fills that order and it cancels out the other one. And the way that I built this was I just right clicked on this option. I went to buy custom and I went to OCO bracket. If you just wanted to put a stop or a limit on it, you could just use with stop and change that to a limit order type. So if you just wanted one triggers another, not necessarily this bracket, you could do it that way. But in this sense, we're going to take this order looking at what we see here for Philip Morris, the 160 strike call. So we've talked about before in this class with looking at the net liquidity of this account, we can take a position size of roughly $6,500, and our trade risk, and I guess I'll step back a little bit. So the position size is $6,500 because that is the amount that we're risking in the trade, which is roughly 5% of our overall account value. So we want to make sure we stick within that 6,500 as far as what we are actually risking, truly risking in the trade, which is the price that we are paying for the options. That is going to be our max loss, the most we can lose in the trade. So we want to make sure we cap that out at less than 6,500 in that case. Now, we've also talked about our trade risk in this class quite a bit as well, and that is really going to be the difference between our entry price and where we place our stop. And we really only want to risk about 1% of our account in a particular trade. So what we're going to be looking to do is not take any more risk between our entry and our stop or exit to the downside of roughly $1,300 or so. So we're going to stay below that as well. Now, if we're looking at this option, since we do have about 6,500 that we could go up to, we could definitely do more contracts in this trade. So I'm going to take a look here at what 6 contracts would cost us here. I'm just going to hit the confirm and send. That gives us about $5,000 that we would be placing into this trade if we were to look at our max loss here. So that keeps us within that $6,500 range. So I'm going to click back and edit. So our entry would be right around 820 or so. So that's the level that we're looking at. Now with our stop, since we're taking 6 contracts, in this case, we do need to put on a tighter stop than we may typically put on, and that's just because we have a larger number of contracts there. So we're going to use a stop limit in this case, which is going to essentially be, we're going to essentially put one price as our stop and our activation. We're going to put the second price as our limit price, because the first one, the initial order really triggers on that stop, because that's just our activation price, and that is when the asking price of the option reaches this price. And then it sends our limit order, which we're going to place a little bit below it to kind of catch it in a down moving market if it is moving quickly. So in this case, what we're going to do is we're going to take our entry of 820 and really put this right around 620, or I guess we're going to actually do 650 on our stop. And then we're going to place our limit that's going to come in a little bit below it, because remember, this gets triggered This gets sent when the asking price of the option is this price. We know the ask is always higher than the bid in that case. So we're going to place our order a little bit below, our limit order a little bit below, right around 630 or so. Actually, we're going to give it a little bit more room, 620 just in case. In case it's a wider spread, in case it's a fast down moving market, we're going to do that and change these till good till canceled. Now, as far as our upside, so if this stock runs up to 168, which is our profit taking level, thank you, Wiley, for showing that link. So we just kind of moved over to the link there. That's one of the things that we check before we place our trade, is just making sure the number of contracts is the same. So thanks for that reminder there, Wiley. Great call out. But as far as just kind of back to what I was saying with our possible profit target right around the stock hitting 168, which is another $6 move. Let's just see within the next week and a half where that would possibly place the price of our option using this Theo Price Mark tool. So what this is going to do is it's going to allow us to take a date, take a stock price adjustment, take a volatility adjustment, and just see how our option price would change over that time period with that stock price move and or volatility movements as well. So if we just take this and look out from, today is the 23rd, let's just look out to January 2nd, because that's another week and a half. We talked about how that's the amount of time that it took for the flag to initially break out. And let's just say we have a $6 move to the upside, no changes in implied volatility during that time. Let's just see what the price of our option would be. Whoops. Did that really get rid of my entire trade? Oh, darn, we're going to have to rebuild that. So what we're going to look at is the mark price of the option now is 810. That's that difference between the bid and the ask. Theoretically, within the next week and a half, if volatility stays the same, if the price of the stock goes up $6 to that resistance right around 168 or so, that's going to be an $11.34 theoretical price of our option. So in that case, that's about, I want to say that's about a 30% gain there. Let's take a look. 1134 divided by 810. A 40% gain. So that's going to give us a 40% gain there in the price of the option. So that could give us an idea of where we could place our possible profit target. A 40% gain is pretty decent within a week and a half. So that is pretty aggressive there. But let's take a look. I'm going to rebuild this trade real quick from what we just had, since I had lost that with clicking on another contract. So we have that, we have this good till canceled. We had a stop limit and we were going to place this at 650. This at 620. And let's, since we looked at this price, Theo price of 1134 on these contracts, let's just be a little bit more conservative and place our profit target right around $11 to the upside. That still gives us, let's see, we're gonna take $11 divided by 810, still a 35% gain. So so that gives us a little bit there if all factors remain the same there. So let's take a look at just placing this trade. So we already talked through this element. This got moved again. We're going to change this back to what we were talking through before. The stop at 650 and the limit price at 620. Keep in mind that limit just means we are looking for a fill at 620 or better. So looking at the review order screen, we can see what our order looks like. We're looking to place this trade, a long call at the current price using a limit order. We have our, yep, and that's where we need to edit it. This needs to go back to $11. $11. Okay. So we have our profit taking at $11, really close to that theoretical move that we're seeing there. We have our stop on the downside. The difference between our entry and our exit is really that trade risk. We're still staying within that 1%. And the most we can lose on this option is roughly what we are paying for that option. Just take the price of the option times the multiplier, so 600, since you're controlling 600 shares there. And we're going to place this in our long options account here. So I'm going to hit send there. Okay. So we sent that trade. It looks like we got filled on that trade, and we have our OCO in and working for us. So we are going to keep an eye on that one. Let's look at our next trade. So we broke that down in depth. We're going to go a lot quicker on this next trade to make sure we can just kind of get through this here. So Rocket Lab is another one that looks like we've had quite a bit of a breakout here on the horizon. So I'm going to draw a couple lines here of old, or I guess that resistance that we were looking at that is now new support. It's going to be that entire gap ledge that we really saw with this almost like a breakaway gap in this case, where we see a gap above that prior resistance zone. And that's really what we saw here with Rocket Lab. And another notable thing here is we're almost having, like today we had a little bit of a support retest really back to that zone, but we still didn't penetrate that gap whatsoever in this case. So this could actually give us a kind of heads up to a possible pattern that may be forming, which I would take these recent lows, kind of draw those to these recent highs that we just made, or I guess even today, but those highs that we saw, which could be the possible start of a flag pattern really taking place, especially with that support retest. So that was a pretty steep ascent here with roughly a $25 move just in a matter of 4 trading days. So that's definitely going to be something where we'll find notable and possibly want to take a bullish trade in this case, with the direction of Rocket Lab really breaking out to the upside. And the idea here with trading this trend is to buy high and sell higher in this case. So that is what we are seeing on the breakout. There, it looks like there's going to be about 2 closes above that level. And so we're going to look to place a long options trade here. Let's see. I'm looking at the chat. Yep, Brent made a good comment in the chat how I changed the stop order, which is technically a stop market, to a stop limit. I did that so we had more control of the price over that last order. So if I look at the trade tab here, and I just look at this most recent move, I look at really this breakout to new all-time highs, I'm just going to look for a trend trade in this case. So I'm going to look a couple months out with Rocket Lab. I see the volatility is still relatively low within the lower thirds. I'm going to look at the 20th of March to give us a couple months in time here and switch this back to the things that we like to view at the start, which is the volume, open interest, and the Greeks. So in this case, we have a lot of liquidity within these strikes and have pretty tight spreads here. So this isn't something that we do need to worry about with these ones in particular. You can see the open interest. You can see the heavy volume in some of these contracts. We're going to look for an option that is slightly in the money with that level of intrinsic value that we see there. A little bit of a larger delta than 50 to have a little bit of a move on that option if the stock price moves in our direction. So what we're going to look to do in this case is buy this 75 strike call, and I am going to buy custom with just a stop in this case. Since this is going to be a trend trade, we're going to keep our profits uncapped to the upside here, and we're just going to use maybe even some Fibonacci's on the chart to basically project some resistance levels that we could see as well, which I'll snap back to that in a few. So here, the price of the option is currently $14.60. We're going to try for $14.40 in this case, and let's just see how many contracts we could possibly do. We could do up to 4 contracts in Rocket Lab. In this case, we would be risking almost $5,800. That still keeps us within that range there. And then as far as our stop, we are going to use again a stop limit order. Difference between a stop market and a stop limit is that stop or that activation executes either a market order in this case, where you have no control of the price, or it executes a limit order where you can place a price of that option. So we're going to go to the stop limit in this case. Since we are looking at 4 contracts, want to stay within the risk parameters of our account, we are going to look at a price of $12 on our stop here, and we are going to place our limit at $11.80. Okay. So if I do the math here, just making sure that this stays within the risk parameters, that 1% of our account, I'm going to take that entry price minus our exit, because we know that if the order triggers off of the ask, in this case, the asking price of the option being $12, our $11.80 limit is going to be sent there on the downside. We actually may give that a little bit more space looking at the width of that spread. Giving that a little bit more space there. So we take 1440 minus 1170, and that gives us 2.7. We're going to multiply that by 4, and that's going to give us still about $1,080 risk here in this case. So we're still staying within those risk parameters of our account here in this case for Rocket Lab. So I'm going to look at the confirm and send here, and I have a couple questions here from you guys. You mentioned, which order did you select, the order type for Rocket Lab? I'm going to go back and show that one more time before we send this order. I right clicked on this option, I went to buy custom, and I just selected with stop. The reason why is because with the other option, we had a profit target that we were looking forward to with that price pattern that we saw. So that kind of gives us a little bit of a guideline here. So I used that OCO bracket to place a profit target to the upside. We could certainly do that on this trade. In this case, I just kept, we're just kind of going with the stop on the downside and keeping our profits open to ride this trend over the coming months. So I just chose that, or I guess with stop limit is what I chose. Okay, let's see if we have any more questions before I send this order. Yeah, stop limit there. Why not base stop on stock, breakdown to support? Eric, we could base the stop of the option or I guess a market order on the option at or a limit order on the option. As far as the price of the stock, we could definitely do that. I just didn't want to do it in this case because we don't know what the price of the option will be in that case. A lot of times we can use that Theoprice tool, kind of make those adjustments, or we can use a limit offset order within the conditional order entry to do that as well. But in this case, I wanted to know exactly where my risk is going to be defined within this trade, exactly how much I want to risk. So that's why I stuck with the actual just kind of control of the price there. Michael, with volatility relatively low, why are the premiums so expensive? Well, it is breaking out to new all-time highs today. So that could be one indication there as far as the premiums being so expensive. You could look at the relative price of the premiums too. If you ever want to chart an option, you could just right click on the option and copy that symbol and place it into an options chart and just see where the price of that option has been over a certain period. That's where you can kind of see if they're relatively high or low in that case, but just keep in mind the passage of time. What is the implied volatility is another question. Implied volatility percentage right now is almost 87%, but the actual percentile of where that ranks over the past year is right at 29. So it's implied volatility has been over the past year, so it's still relatively low. You could also see where it's been over the last year, but we feel confident with this trade. So I am going to hit confirm and send in this case. So you're just going to review the order here. And I'm going to make sure I place this in the long options account and hit send. Okay. Perfect. So that was sent there for our option. We just got to fill. Okay, we got to go through these quick. I'm going to give you a quick little round table of patterns to possibly keep an eye on in this case. So Dominion Energy, we just had it looks like we are actually, we broke down of this triple top pattern or this range, and it looks like we're climbing back up today. So that could be a failed breakdown in that case. Could look for a move to the upside. Another one to watch for a possible directional trade is ABBV. We have this triangle really taking shape over the last couple months or so. So we do see that as well. A couple of